Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the gold market. So you can see actually yesterday gold markets have shown stronger performance that we have suggested initially, so we thought maybe some reaction on 1855 will be, and I thought that I will tell about the OP 1875 a bit later, although we have mentioned it. We mentioned this target in the fundamental part of our research, and its next will be around 1875. But in the technical part, well, I postponed it on the later, but you can see market has hit it almost within just one session. So it was fast acceleration, reaction on the daily XOP target was very small, and we do not see it even on the daily chart, so you could see it only on the intraday charts. So what we could do currently? So currently, as you can see, market stands at the resistance, and theoretically we should wait for some pullback, some response to the current area, because this is important 1886 level. So you can see it comes from this top. It's very important top here. 618 resistance and agreement resistance with the OP target. Market is not at the overbought, but overbought stands also not too far, 1888. So theoretically for scalp traders, this is an area where it makes sense to consider some scalp short position opening based on some patterns that might be formed on the intraday charts. For the daily traders, it means that currently it's not a good point for taking a new long position. So the market has completed our nearest standing targets. We need to see the pullback. We need to see some response on the resistance. And initially we thought that might be from the 1855, but as market has shown acceleration directly to the 75 area, it means that we will be watching for a pullback right now. So maybe it will be some harmonic pullback based on this recent retracement, right? So it might be some kind of, I don't know, maybe hand shorts or something of that sort. So it might be somewhere to 30% support area around 1807 or maybe slightly higher. So some reasonable pullback here could happen. Besides, standing on the resistance is always not very good idea for taking the new position. So anyway, you need to sit in the hands and see what will happen. For those who intend to go short, it would be better to include these levels in your stop placement and hide stop above the 1888 area. That will just let market to breathe, because you can see for a few cents market still hasn't reached the OP. So it means that here some fluctuations might be or something of that sort. And it will be better to foresee that and place stops slightly above this area if you intend to take some short position on the gold market. In general, by taking a look at this ABCD pattern, you could see that the CD leg definitely shows some acceleration, and it's faster than AB leg, and it's always good side. So you can see that. But no, this small harmonic, but it seems that some visual effect that here is some acceleration. By the timing of the two legs, it seems very similar. Anyway, overall upward action stands good, and based on the shape of the retracement, we will see whether it makes sense to expect further upward continuation to the XOP that will stand above the 1922 area. This last 618 resistance here, market could climb higher. For that purpose, we need to see what the response will be on the market here. On the 4 time frame chart, I think that while we are waiting for some reaction, we could consider some Jordan-Napoli patterns. Since market stands at the resistance, actually here is also 1618 extension of this former retracement. This, by the way, potentially point on the possible hand and shoulders pattern, theoretically possible if market will try to show the deeper reaction on the current resistance. We will see it, but currently we are mostly interested with this thrusting action. It looks very nice. And here we could consider, for instance, the bread and butter pie or some other trades. For instance, market will show the pullback to the 1850 retesting of the broken confidence area. If you remember, 1851 was the level that we talked about. So market will retest it, forming the bread and butter. That will be a nice opportunity to take the long position on the intraday charts. This could be scalp long trade with bread and butter and pull back up to the upside. So that's the trade that we could keep an eye on. Today on the hourly chart, that's our daily XOP new reaction that you could see. It was very small and market just jumped up. Here on hourly chart also is forming some kind of the minor and short pattern or something. With this bearish engulfing pattern that stands in place. So if you have the bearish view and would like to take the short position on intraday charts, you just need to keep an eye on some patterns that might be forming here. So, in two words speaking, on the daily chart, we do nothing and wait for a response on the resistance, because taking the new position on resistance is not a good idea. On intraday charts, those who have the bullish view, you could keep an eye on this frosting action and possibly Jordan-Napoli patterns. For instance, market shows retracement and touch the 1850. That might be a nice chance to go long. It might be the burn body trade. Very short-term traders on the hourly chart also could keep an eye on the possible bearish patterns here. Trying to possess yourself for this response on this area. If you would like to hold the position in a longer term for a few sessions, in the current circumstances, it would be better to place initial stop somewhere above 1888, because a reaction could start not right now. Market could fluctuate around this area for some time before the major pullback will start. So if you are aiming on the major pullback here, some deeper retracement, then it will be better to foresee possible fluctuations and just place stop above the daily or but that will be safer. That's what we have currently on the gold.